Hi, I'm Jim Brett, President and CEO of the New England Council. Thanks for tuning in to this month's episode of Inside the Corner Office, where we catch up with the leaders of some of our region's most well-respected businesses and organizations to learn more about their career paths and about the institutions they lead. This month, our guest is Tim Barrett, the President and CEO of the Federal Home Loan Bank of Boston. Tim shared about his own impressive career in the financial services industry, as well as the history, the evolution of the Federal Home Loan Bank system. We also had a very timely discussion about the important role the Federal Home Loan Bank is playing to help address the housing crisis in our region, and the many programs the bank offers to support home buyers and make home ownership more attainable for New Englanders. As always, I thank you for tuning in. I hope you enjoy the conversation.
Tim, thanks very much for joining me today. And I know that I'm looking forward to learning more about the Federal Home Loan Bank, and I hope our listeners are as well. But Tim, before we talk about the bank, let's talk about your background. You've spent your entire career in the banking industry in New England. So can you tell us first, what prompted your interest in pursuing a career in banking?
Well, Jim, I can't say that I had a grand plan. I grew up in New York, went to school up in New Hampshire at St. Anselm College. In New York, the draw was always Wall Street. So I went to Wall Street right out of undergrad. And then a couple of years doing that, I had an opportunity at a bank in Connecticut and grew to really enjoy banking. Now, this was the 80s, okay? And a lot of things were happening in banking in the 80s. So the longer I spent in banking, the more interested I got. Now, my experience in banking has always been what I'll call internal, not customer facing. I was involved in the management, the balance sheet management, the products, and those type of things. So then I guess I just learned to love it, and I went back, got my MBA, and then the rest is history. I just kept moving into different types of banks, large banks, small banks, community banks, and then moved my way up the coast into Boston.
Yeah, that's what I was going to ask you. You've had a very incredible career at some very impressive institutions, leading up to your role now at the Federal Home Loan Bank. Can you just walk us through your career path and how you got to where you are today?
Yeah, so again, I started back in the early 80s at Citibank, so a very large bank, and more on the, I would say, the security side, Wall Street security side. And then got involved with a bank, the Hartford National, in the mid 80s, and I was working on the Treasury area, and mainly the Treasury area is where I spent most of my career. And as you know, that's where you manage the balance sheet. That's where you price both sides of the balance sheet, loans and deposits, and you do other things to manage the inner workings of the bank, making sure it's profitable and the like. So I basically, as you remember, in the 80s. A lot of tough times at banks, a lot of mergers, a lot of combinations. So I really rode the wave from the Hartford National to Connecticut National to Shawmut Bank to Fleet Bank. And then Fleet got bought out by Bank America, which got me in a situation where I'd had to make a decision. And I ended up working with a different type of bank, a custody bank, which is it's banking, but it's like State Street. Investors Bank is the name. Then State Street bought Investors Bank, and then I had to make another decision. And what I ended up doing then, which is kind of interesting, I had an opportunity to work at Fidelity Investments, which, as everybody knows, is a mutual fund powerhouse. Right. But they wanted to start a bank, so I joined a team to start a bank. in the inner workings of Fidelity, which was really fascinating. And it was a great opportunity for me. But then 2008 hit, and those plans got thwarted a little bit. And I spent time in Fidelity, not doing banking, but really helping them in their treasury department. Again, going back to treasury. And then the opportunity here at the Home Loan Bank showed up about 2010, and it really showed up because I assume everybody remembers the financial crisis, and a lot of folks' experience in financial crisis is personal. In this case, banking was hit very, very hard, and Home Loan Bank wasn't immune to that. So it was an opportunity to come in here at a time where this bank was having trouble coming out of the financial crisis. So that opportunity presented itself, and so that was 2010, and I continued to work here in the role of I was on the management team and ran treasury again, and then had an opportunity 2 years ago, now more than 2 years ago, to throw my hat in the ring to take over as CEO, and that's kind of that's how I got here. So in banking, you can go through the lending side, credit and lending side, or you can go through, what I'll call the investment side, and I came that way. I came through the investment and treasury side. So that's my story. So it got me into. So I've been in Boston now almost 30 years, and it's been a nice run for me. And
yeah, I mean, you've been here almost 30 years, and yet you're a New York Giants fan. Knowing that this is New England Patriot country, how did this happen, and how do you remain a Giants fan?
So now you're going to start talking about resiliency or total
tremendous faith.
Yeah, it's it comes down to when I grew up. My father watched the Giants and the Yankees and the Knicks and the Rangers, and so when I got to New England around '85, I just held on to it and just continued to do that. Now it was painful after 20 years of not getting invited to playoff and Super Bowl parties.
Right.
And my kids are largely New England fans, so
okay.
But I hold on to it.
Does that stretch to any other New York teams? Baseball, basketball?
Yeah, I'm a New York Giant fan, a New York Ranger fan, Yankees.
Okay. Yeah. Wow.
And Rangers. So now I will say, because I'm not, I do follow local sports. I love the Celtic organization, and I love the Bruin organization. So I watch those, and I watch sports, and so I'm not a crazy anti-Boston fan at all. I just like my New York teams.
Yeah, no, it's loyalty. Yeah. Give you credit for that.
Yeah.
Outside of the banking sector, many people are really not familiar with the Federal Home Loan Bank of Boston, or even the Federal Home Loan Bank system more broadly. Can you explain more about the bank and the important role it plays here in the New England region?
Yeah, so I'm glad you acknowledged that there's not a lot of understanding of an institution that started in 1932. The system was created way back by really smart people who had a really big problem, and that was, as we all know it, the Great Depression and the stock market crash. And really, what it was a liquidity problem. Banks cannot lend because they couldn't fund themselves. So again, smart people put this system together. It's what we call a wholesale bank, a cooperative bank. And the thought back in the day, which is still true today, is that the home loan bank system will be driven by members, and the members will own the system. So we're privately owned. So we're not, even though we have federal in the name, they were smart back then to say to members, you have skin in the game. So that's how it started. There's 11 banks in the system. Used to be 12, and now it's 11. And if you're a geek like me, it's similar to the Federal Reserve System, which has 12 banks, which was started around the same time. Very different roles and responsibilities. So today in New England, we have over 400 members. And for folks listening, what that means is we basically have every bank in New England as a member. We have a large amount of insurance companies and a very large amount of credit unions. All are eligible to join. Interesting enough, back in 1932, banks, thrifts were members, and so were insurance companies. But large banks and credit unions were not, primarily because credit unions didn't exist. So that changed in like the late 90s. So they became members. And our job is twofold. One is we provide funding to these institutions so they can do their business. They can lend money to individuals, they can lend money to communities, they can lend money to businesses, small businesses, large businesses. In the case of insurance companies, the funding goes to support of housing because insurance companies buy securities that are backed by houses, residential mortgages. So that's another way of getting money into the housing market, which is primarily our support. That's what we do. So we fund these institutions. That's our first mission. The second mission is, which people don't realize, they feel it if they're involved, is that we invest in affordable housing projects and community development. So one of the things that was set up back in the day when they created these programs is the Federal Home Loan Bank of Boston and all the other banks, we have to set aside 10% of earnings every year to affordable housing. And we have programs that will use that money and will generate, hopefully, projects and programs that will help people get in their house. We also, and we're not alone here, but we've been early. We were early adopters. We have what we call voluntary programs. We also set aside more monies, additional dollars every year to programs that we create and get it out to the community. So New England, how people see us in New England is they'll see us through our members because we don't lend directly to individuals or to companies. We lend through our membership. So they may see it there, but they'll see it in the communities where our members, especially our depositories, are investing in low-income housing, affordable housing, rental housing to support communities, to support rehab centers, and programs that get first-time home buyers in their house. So, 2 years ago, we went through a process where a realization that folks didn't really know us. And so we've been trying to step that up. And these kind of conversations are helpful in that way.
Well, that's what I was going to ask you about the different programs that you do have. But, here in the New England Council, we meet with business leaders all across sectors of the economy. And that one issue keeps coming up, and that is about the high cost of housing in our region and how it's impacted our competitiveness. So I know that you have so many good programs. Maybe this is the time to tout a couple of them. You just mentioned about the maybe first-time home buyers and other programs. But this issue is right across the board, and whether it's low income or middle income people, just really having a difficult time in accessing affordability and housing.
Yeah. So a couple of things that we do, federal home loan, right? We're dealing in home loans, and it comes in different flavors. One is just normal funding to our local community bank, and they would then lend out in projects that they feel are supportive of in their community and an individual. So that's the lion's share of the dollars that we get out the door to those members. But specific to affordable housing and community development, a couple of things that we do. Again, part of the 10% is affordable housing programs, and those are grants programs, and they're set up to help individuals, but also help projects to support their communities. So the affordable housing program is the one that's statutory. It's the ones that are required. And we do, obviously, we're doing that and have been doing that for 30 odd years. Most of our members know about it. Most of our members are keyed in on that. They know it when we bring the money out. They know how the process works. And the one thing I'll say about the process is what we try to do through this, and as a competitive process, is we try to incent good behavior in our scoring. So if they apply for a affordable housing program, and they have to meet some criteria. So it's not a matter of just giving it to any bank. It's giving to a bank that's going to specifically meet some of the criteria that we put out there. And that criteria will drive, hopefully, impact. So that's the statutory program. One product that we use, even in that program, is a down payment assistance, to get to your point.
Mhm.
I mean, I have 4 kids, some of them are still trying to figure out how to get enough money to buy a new house, first time house. And I think they're fortunate, right? They're in a good position. There's a ton of folks across New England that are still trying to figure out, I could make payments, but how do I get in? So one thing that the bank has established years ago was a down payment assistance program. And that's in the affordable housing space. That meets some needs in communities where individuals are below the median income. Now let's go over the voluntary side. We've noted in voluntary that this is a product that works. So we've actually started a couple of different projects and programs that do the same thing. So almost replicate the National Down Payment Assistance Program with other down payment assistance programs. And one in particular we're really proud of recently was a program that would allocate monies to people of color. So we have programs that anybody can get, and then down payment assistance. And then we also have specifically, because one of the things that came out of Harvard did a study, and the racial wealth gap in New England is just dramatic. And we felt we have these type of programs that meet the general need, but maybe there's a program that we can do to help reduce that racial gap. So we're doing that. We have other programs. So anyway, that particular program, let me just put a name to it, is called Lift Up Home Ownership. That one in particular, we just put out there last year, and it was very successful. And we're doing it again this year. We're doubling the amount of monies, and we're in the midst of that. The other one's kind of unique is Jobs for New England program. That program provides support loans to small businesses. We thought about that even before COVID, where, believe it or not, companies couldn't hire, which is kind of the situation now. During COVID, it was a whole different environment. We didn't anticipate that, but the point here is small businesses can go to their members and get funding for, sandwich shops, restaurants, nursing facilities, and will provide that kind of funding for jobs. And we've actually had a lot of success in terms of providing that impetus. But Jim, I got to tell you, I've been at this, now it's going to be my 14th year in this role the last 2 years. The demand just keeps going up. So we can't solve all issues. So we're trying to be very surgical and where we can help out the most. And we know there's other monies out there. There's federal monies, there's state monies, there's different programs out there. We're not trying to compete in a sense. We're trying to find where we plug in the best way. But yeah, so we're, in our minds, We're going to continue to do the voluntary side. So we're going to continue. Our board is very supportive of doing as much as we can. Now, there's not a limit to it, but we can't forget that the lion's share of the dollars leaving us are there to help our members do their normal course business, right? The local community bank in New Hampshire, in Maine, they rely on us just for normal funding, and we do a lot of that as well. We have a lot of products that meet their needs, and we're constantly in contact with them. And one thing I will say, when I say wholesale bank and I say cooperative, we're not a community bank. We're not a regional bank with thousands of employees. Believe it or not, we have 200 employees here at the bank. So we have a small group of very specialized folks, and we can leverage the balance sheet, and we can actually be very effective in providing funding. That's that wholesale relationship, right? We don't have a lot of branches, and we don't need to have all of those connections. But as long as we have connections to the member, and the member has connections to the community, it's a very effective model.
So what percentage of your revenue programs are dedicated to housing?
So it's all about earnings. So the way this model worked when it was set up was what I'll call the normal course business of providing loans to our members is the lion's share of the balance sheet. The dollars that we provide is a percentage of our earnings. So 10% of earnings, you make $100 million, you put a set aside $10 million. So on a dollar basis, it's much bigger on the normal course lending because that's the business that we're in. This is after all expenses are paid. It's against our what I'll call our residual net income is what we're lending out. The important thing here is I'm sure you've seen this, but if people are understanding how this works, is we're gap funders. So there's a lot of programs out there or projects out there where there's X $million multifamily rental project in Brockton, and the funding it's needed. There's different levels of funding that's needed to get that project done. Some of that may come from the federal government, some may come from tax credits, and we fit in there. So our dollars, all the dollars here are leveraged in a way that you can get a lot more done in terms of the project size. So, we may have on a given year upwards of $40 million of grant money, and that will replicate itself a couple of times into projects that are much larger and much impactful. So that's the tough thing about explaining that to folks. Now on the business side, our balance sheet, our lending right now, we can go from 30 billion to 80 billion in actual lending to our members. Those are just loans that we put out there. That's aside from what I just explained. And that's the kind of leverage we have in our balance sheet. If New England, here's an example. During COVID, our members said they didn't need any money because the federal government came in with all these programs. So in the Boston Bank, our balance sheet just shrunk. Our lending went as low as $20 billion. After COVID, the government left, the members came back, and we went back up to 40 billion. It's that ability to grow and to contract is what another beauty of what we do. So it's a tough answer. It depends on where we are in the economic cycle. We're busy. The banks need us, the insurance companies need us, the credit unions need us. And right now, we're much higher than COVID. We're probably as high as was before COVID. And we'll just keep growing, or we'll go back down. That's the utility of it. That's what's really powerful about the model.
Do you have any programs or any of the financial institutions that you work with have programs for first-time home buyers and educating them on being a first-time home buyer? Because some people
Yeah,
say
that's a
that,
great
yeah.
a great question. So obviously, financial literacy is really important. We don't have that relationship directly with the borrower, but as part of our programs and as part of application process, the banks, in the case of the banks or the credit unions, could offer, some do offer that literacy. We're also seeing it. We have they're not members, but we have affiliates. The housing finance authorities in Massachusetts, Massachusetts Housing Finance Authority, Vermont Housing, Maine Housing, Connecticut, Rhode Island. They also have similar programs, and they're providing education or as much as they can training. But that's one of the things that we're seeing as an issue, right? There's an entity that we have in New England, and it's all over the country. It's called a CDFI, Community Development Financial Institution. CDFIs, if you will, are bank-like in that they lend. They're not bank-like in that they don't have deposits. So we provide through our members funding. We know that CDFIs provide a very important role in these communities around Boston, Western Mass, in Maine, and they do have programs that provide education, because in these down payment assistance programs, you can get somebody in, and the last thing anybody wants to see is that they're not, they don't have the ability or the budget in place to be successful. So there are programs. I can't say right now that we in Boston have a specific program, but we're very cognizant of that. And those are the discussions we have with our members.
In my former days in the legislature, we dealt with an organization, MAHA, Mass Association of Housing Assistants, and they did just what I was talking about, educating people that it's not only important to have the sufficient amount of money for the down payment, but what happens if there's a leak in the roof or the oil burner goes, and all of a sudden you say, I don't have anything in reserve. So you don't want them losing the, that home. But I thought it was an invaluable service, invaluable.
Yeah, it's a whole package that folks have to, avail themselves of to have that education in terms of being able to handle a home. Folks want to be in a home, right? The lenders want to put them in the home.
Yeah,
these programs help them, but as you say, 30 years is a long time.
That's right. We already touched on it, but if you go into a little more detail, I understand that the Federal Home Loan Bank of Boston, provides the funding to the financial institutions. Can you explain exactly how that works?
Yeah. So again, the way we're set up is a member has to join us, right? So they own stock in us, and we provide by being a member, we have products and services that they can avail themselves to. The key product that we have is a loan to the member. We call it an advance. So from a credit perspective, as a member, they have skin in the game. We lend to any member on a collateralized basis. So we're covered in terms of collateral. What we set up ahead of time is that we create efficiencies for a financial institution to come to us for a loan. It's not like you or I going to a bank, applying for a loan, 3 months later, maybe getting that loan. This relationship is set up that financial institution, let's say a bank out of Western Mass, is a member in good standing. They have collateral, they have capital. How it works is, Jim, they either call us or they can go online. They can select the type of loan they want. There's characteristics. They can borrow for 1 day, they can borrow for 1 year, they can borrow for 10 years, they can borrow for longer. And they would tell us what they're looking for. We would price it out. We would tell them where the market is. They would accept it. Next day, they would have funds. Sometimes same day, they will have funds. I'm explaining a situation that we are set up to lend, and we've done all the underwriting beforehand. And as a member, we're going to constantly review your credit worthiness. But the reason we set it up this way is we know financial institutions, especially banks, are managing their day-to-day, and they need us to provide that buffer so they feel comfortable lending in their communities. They feel comfortable that if something is maturing on their balance sheet, a loan comes due or doesn't come due, that we're there to help them grease the skids. Now, let's go back to 1932. Bad things were happening. There was a run on the banks. Money was leaving the institutions. The Home Loan Bank would provide that stability in the worst case scenario. But also, that relationship, and I hear it from all our members, we give some calm to the world of lending. Either you're lending to a company or an individual, you want to be able to say that you have enough cash to make those loans and grow, because we want you to grow. We want you to grow in New England. We want you, the residential market needs money. We want you to be able to present that money. So that's the benefit of the wholesale relationship. And that's how it works. It's literally a phone call away to get a very large amount of money, and therefore keep going, do your work. So that's how it works. It's a very unique model.
It is.
And if you talk to any of the banks or any of the insurance companies or credit unions, what's nice about this is that we're not competing with anybody. We're part of their strategy, and they need us. And that gets replicated 10 times across the country. It's the same deal. The amount of members is something in the order of like 6,000 members in the United States. So there's a lot of institutions that rely on the Home Loan Bank system.
How does the Federal Home Loan Bank of Boston compare to your other colleagues, your other 10 colleagues, in the amount of lending you do to housing compared to all your others?
Yeah. So we all are under the same requirements.
Mm-hmm.
We have the same mission. Where we are different, it could be the membership number and complexity is different. Boston is very diverse in that we have 400 members spread across small institutions to large institutions, but not a lot of large institutions. Some institutions have a smaller amount of members, or maybe most of their members are very large institutions. So it's hard to tell you what drives the size of the balance sheet because of membership. But right now, if I just stacked them, New England, Boston is probably the second smallest in terms of size of lending. So how many dollars are out on the lending side, the advance side? But in terms of the amount of members in New England, we're probably in the middle. So there are some larger banks like Des Moines, for instance, a very large home loan bank because they cover a large part of the country. We are New England. New York only has a couple of states, but they have very large institutions. So it's not, it depends. When they drew this map back in 1932, you wouldn't draw it this way again. Most of the population was on the East Coast. And so there's a glut in I would say, Midwest to East Coast, because that's where the population was, and that's where the financial institutions were. But today you would do it differently.
Interesting.
Yeah, so and all of us can grow and contract very easily. So it depends on, when do you look at those numbers, but overall we're probably the second smallest right now.
Mhm. You know, we've seen remarkable changes in the banking industry overall in recent years. You talked about all the different banks that you worked with up until 2010. So how has the role of the Federal Home Loan Bank evolved to keep up with this industry?
Yeah, so that's a very topical question. Historically, I mentioned we started in 1932. There was, over time, there has been some legislation that I would say evolved the system. So a couple of dates, late 80s. If you remember, New England was in really tough straits with commercial real estate, and banks were having trouble. So there was a lot of legislation at that time, and what they, for the system, how we changed. I wasn't here, but how we changed was they added credit unions, and they added large banks. And they also, at that time, officially created an affordable housing program. So from 1932 to 1989, it was strictly banks lending in home loans. But in the late 80s, the recognition was we need more liquidity to more financial institutions, so we had to adapt. And they wanted the home loan banks to be specifically lending into affordable housing programs. So that's where we are today. And then in 2008, which was the financial crisis, more regulation came in. And the biggest change there was there's a lot of disclosure issues. There was like regulatory issues. So we brought out a new regulator. But we had the only adoption there was to do more lending. That was a liquidity crisis. And that took 10 or 12 years to get out of. What's happening now is interesting. Our regulator just finished a review of the whole system. And what they're looking at is to re-up and reconfirm our mission. So I said the mission was we're going to lend to our members and we're going to support housing. Their review, and it was their review, and I give them credit, the FHFA, which is our regulator, they created a tour of the nation and had open forums and talked to all the stakeholders and said, hey, what do you think about the home loan bank system? And if I was just to summarize it, what came out of that from the stakeholders was do more in housing, do more in housing. So is that a change? No, but really what it does is it adds urgency to new programs, adds urgency to doing more where in New England where we can do it. The other thing that I think they're looking at is the other side of the mission, the funding mission, because arguably something happened last year that I think has the financial system worrying about banks again. And in 2023, we had three failures. Three banks actually failed in March of 2023, which made the papers. I mean, if most folks in the business world, financial world knew about those. So what we're adapting to now is our liquidity programs, are they sufficient enough to help banks get through liquidity crunches? Because what's happening in the world, what we found out with one of the banks is that a run in the bank could be 24 hours. You know, back in 1932, you had to wait online to run a bank. In March of 2023, one of the banks had a run that happened so fast. So again, we're lenders. We have to think about that. How does that affect how we present ourselves to at least banks, maybe credit unions? So some of that's changing. But the message, though, Jim, is what you started the conversation with, is the housing issue in the United States is in a bad spot. And what can we do to continue to support it? And in terms of our relationship with our members, and then in our programs. And, you know, all the banks are committed to doing that. And so So that's where we're at. Is just I think we've confirmed what we do. You know, regulators will do what regulators do, and we're going to hear from them in different ways. But yeah, I think the one thing that we saw in 2023 is technology. You know, it continues to show itself, and how should we present ourselves to our members with a world that could move very quickly. So it's a little scary, but it's also a nice challenge to have. So we're going to continue to work on that.
You know, given the New England Council's focus on federal policy and how it impacts the New England region, we always like to wrap up these conversations talking a little bit about what is going on in Washington, D.C. We've certainly seen Congress take notice of that topic also, of housing challenges across the country. And quite frankly, we've been encouraged. It seems to be bipartisan, because the housing crisis appears in the red states and the blue states. They don't discriminate, so it's all across the country. But what are some of the federal policy issues that the Federal Home Loan Bank is monitoring right now?
So on the Washington side, one thing that our regulator through this review are going to have recommendations for us, and they're going to have recommendations for Congress. One of the recommendations for Congress is to change the rules around affordable housing programs by increasing that 10% to maybe something higher. So that's one thing we're watching. Will Congress open up the Federal Home Loan Bank Act like they did in those two years that I told you about? And will they say, okay, let's increase the allocation to housing? So that's important, because we have to react to that, even though I told you we're already doing a lot more.
Yeah.
So we're keeping an eye on that. The second thing is, will they think about membership differently? Again, in 1989, they invited credit unions and large banks. So in 2024-25, we're watching membership. Will they add members or membership sectors? So we're keeping an eye on that. The one thing that we always do as bankers is we're keeping an eye on the amount of regulation that's coming down. You know, as I think you know this, if every crisis creates regulation. So one of the things from a bipartisan or partisan perspective could happen, could not happen, is if there's a change in administration, that may change, you know, the regulatory construct. So we're just keeping an eye on that. We're kind of agnostic, because our programs, again, over 100 years and all these administrations, continues to do its job. But to answer the question, Washington's a very different place the last couple of years, as we all know.
Sure.
And so you have to keep an eye on that. So it's all about, are they going to change any of the laws related to how we can do our business? And how much regulation will change, which basically means how we can do our business, and what things do we have to follow. Here's a joke that we have internally. It's really hard to give away money. These programs that we put out have heavy regulations, especially the ones under the affordable housing programs.
Yeah.
People laugh and say, well, just keep at, just give out the money. It's like, it doesn't work that way. So we're very, very interested in any change that would make it harder for us to get to market slower. We want to be as fast. We want to be as nimble as we can be. So we're keeping an eye on all of that, and just generally where the winds are going to blow from a national perspective. Locally, our representatives, both in Senate and House around New England, and even the states, have been very, very supportive of the Federal Home Loan Bank. Very supportive. We're in connection with them, and making sure that we understand, and all of the associations that we deal with, bank associations, insurance associations, and housing authorities. We tap into all those, making sure that we're all rowing down the same, rowing the same way. So But yeah, the big picture, everybody's watching the election, and we'll see where that takes us.
That 10% that you have set aside, that was put in 1932 in the legislation, and it has never changed since 1932.
No, it actually was put in 1989 was when the housing
10%.
program.
Okay. Yeah.
Yeah.
Interesting.
And most banks are around the 15% total right now. We've been operating about 15%, and those numbers pick up. I mean, those. You know, last year in total, all the programs that all the banks are doing, you know, it could reach up to about $1 billion worth of dollars going into housing. That's not the normal lending. That's outside of that. So these numbers accumulate pretty fast. And again, the point we have to keep letting people know is that we put money into a larger project. If that money wasn't there, we don't know. It may not have gone through. So we're working with everybody, developers around New England, to be as impactful as we can.
Yeah, right. Well, I want to thank you again for joining us today, Tim. I think this is very timely discussion, to say the least, in light of the housing crisis that we face here in not only the region, but this country. But I am truly encouraged to hear all the great work that the Federal Home Loan Bank is doing to address these issues. So I just want to say, again, thank you for giving us the time today. Truly informative and very educational for me, and I hope for all of the listeners.
Well, thanks, Jim. I appreciate the platform and have a good conversation about these things. And what I've learned is no matter how much you talk about our business, you still got to keep talking about it. You just got to keep letting people know what we're doing. And the most informed, stakeholder is the best one for us. It's all out there for folks to talk to about. And one of our last things is we're trying to get out to the ends of the earth of New England. We want to make sure our impact is seen throughout New England. Our name says Boston, but we're here to serve New England. So.
Right. Well, again, thank you very much for all that you do. Be sure to tune in next month when our guest will be the CEO of one of New England's oldest charitable organizations, Leslie Suggs, of the Home for Little Wanderers.